dari industri asuransi. Bahan presentasi sepenuhnya diambil dari training dan studi dari beberapa reasuransi terkemuka dunia seperti Munich Re, Swiss Re, Allianz, ACR, Zurich, dan dalam hal ini saya ambil sebagian besar dari pengalaman saya dengan Swiss Re dan juga saya ambil dari BNPB, ya, Badan Nasional Penanggulangan Bencana, serta sebagian saya kutip dari Asosiasi Inia. Dan analisis presentasi ini berdasarkan pengalaman sebagai underwriter risiko properti sejak 1992 di perusahaan asuransi dan reasuransi baik di Indonesia, Timur Tengah, Asia Tenggara, dan juga Eropa. Profil pelatih tadi sudah disampaikan oleh penyelenggara, dalam hal ini Bapak Edwin Effandy dari Ikonoa. Hanya ada 4 yang ingin saya sampaikan dan kebetulan ini mungkin juga satu materi yang bisa menjadi masukan buat rekan-rekan apa yang dilakukan oleh beberapa pemain reasuransi dunia, termasuk bagaimana usulan dari apa yang disebut sebagai big boys, ya, salah satunya adalah Munich Re terkait dengan pandemic risk yang juga bisa dikategorikan sebagai risiko bencana. Jadi ada 4 agenda kita, apakah itu asuransi, apakah itu katastrofik, kemudian atau mungkin saya terjemahkan dalam bahasa Indonesia adalah apakah bencana, kemudian bagaimana COVID-19 pandemic dan juga insurance, lalu insurance proposal for pandemic risk. Walaupun nanti kita konsentrasinya fokusnya lebih ke arah modeling, mungkin ke arah net cat, ya. Tapi nanti bisa kita elaborasi, mudah-mudahan ada tambahan buat kita siang ini. Yang saya ketahui RMS adalah pemain besar dalam earthquake modeler. Baik, sebenarnya kita kembali, ya, latar belakang kita kembali tergugah akan adanya bencana ini. Ya, kalau kita tarik dari tahun 2004 begitu, sejak adanya kejadian bencana gempa bumi dan tsunami di Aceh, kemudian 2009 di Padang, lalu beberapa yang juga berturutan. Di tahun 2020 yang kalau saya bilang mungkin disebut 19 karena awalnya 31 Desember, ya, 2019. Kita juga tergugah kembali untuk bagaimana kita bisa mengelola satu kejadian luar biasa, dalam hal ini adalah pandemi. Nah, adanya kejadian luar biasa di dunia, termasuk Indonesia, sejak muncul di Wuhan 31 Desember 2019, dan kemudian bagaimanakah kita sebetulnya dari industri asuransi dan kemudian secara menyeluruh kita menyikapinya, lalu apakah yang sebetulnya harus kita lakukan dalam hal ini. Kemudian solusi masa depan yang sebetulnya sudah ada dan diusulkan oleh industri asuransi. Itu mungkin di-share, dibagikan di sini. Tentu saja ini menjadi diskusi yang terus berkelanjutan, apalagi ya kalau di Jakarta mungkin kita sama-sama berdoa mudah-mudahan bulan-bulan ini dilewati dengan baik, lalu Januari, Februari mudah-mudahan tidak terlalu tinggi intensitas hujannya sehingga kita juga tidak terdampak terhadap kemungkinan terjadinya bencana akibat banjir. Baik, definisi asuransi, ya. Ini sekedar untuk merefresh kembali, menyegarkan kembali ingatan kita, karena memang dari interaksi saya sebagai pengajar juga di beberapa lembaga pendidikan dan seterusnya, saya pikir kita mungkin banyak sekali mengambil definisi asuransi ini dari undang-undang. Tidak salah, ya, tapi kita kembalikan lagi ke definisi aslinya, di mana asuransi itu sebenarnya adalah mekanisme pengalihan risiko dari tertanggung, ya, dari siapa saja yang merasa bisa menjadi potensi menjadi partisipan di dalam di dalam pool of risk tersebut, ya, sekumpulan risiko yang memang sebaiknya sejenis begitu, dengan kompensasi adanya equitable premium yang bisa mengantisipasi adanya kemungkinan terjadinya kerugian dari karakter risiko yang masuk ke dalam pool of risk tersebut. Atau secara sederhananya definisi tersebut di dalam bahasa Inggris adalah risk transfer mechanism to the pool of risk by payment of an equitable premium. Apakah itu pool of risk, kelompok risiko sejenis yang bisa kita katakan risiko yang homogeneous atau homogeneous risk, dan kemudian nanti akan direfleksikan dengan bentuk equitable premium yang sesuai dengan tingkat risiko yang terpapar. Itulah yang seharusnya kita ambil sebagai satu definisi yang clear, konkret, agar intensi dari adanya kita berasuransi itu bisa tercapai dalam rangka betul-betul mengantisipasi kemungkinan terjadinya kerugian tersebut. Tentu ini ada beberapa challenge di sini dari definisi ini yang bisa kita turunkan, misalnya pool of risk. Bagaimanakah risiko yang bisa masuk ke dalam sekumpulan risiko itu. Baik, kalau saya kembalikan kepada risk management, memang langkah-langkah manajemen risiko itu ada 5, mulai dari identify, analyze, ya, evaluate, atau membuat ranking daripada risiko tersebut. Kemudian bagaimana kita tetapkan sikap kita terhadap risiko dengan tentu saja membuat satu treatment, ya, treat the risk. Lalu langkah kelima adalah bagaimana kita mengawasi, memonitor jalannya pengelolaan risiko tersebut. Nah, langkah-langkah inilah yang perlu kita lakukan. Tentu, apa yang akan kita pelajari hari ini dalam konteks bagaimana kita mengelola risiko kebencanaan itu seharusnya sudah inherent di dalam aktivitas dalam rangka mengelola risiko ini. How to treat the risk, paling tidak ada 4 yang penting, bagaimana kita menghindarinya, kemudian menguranginya. Kalau kita mampu, kita bisa tahan sendiri atau kita alihkan kalau kita tidak mampu. Dan keempat langkah ini biasanya, ini kebetulan dari salah satu company saya yang pernah saya lalui di Bahrain, kami singkat alert, ya, agar mudah diingat. Alert artinya waspada. Avoid, lesson, retain, and transfer. Dan kemudian asuransi adalah salah satu langkah pengalihan risiko tersebut. Itulah kira-kira paling tidak pengantar dari konteks asuransi. Lalu bencana. Bencana adalah sebuah kejadian yang mendadak yang menyebabkan masalah atau kehancuran yang sangat besar. Atau bisa kita katakan a sudden event that causes very great trouble or destruction. Dan catastrophic risk itu risiko yang bersifat bencana. Dan dari konteks apa yang kita hadapi di Indonesia, maka bencana itu menurut hemat kami, yang paling tepat definisinya adalah kita ambil dari BNPB. Dari website BNPB kita bisa lihat basisnya adalah Undang-Undang Nomor 24 Tahun 2007 tentang penanggulangan bencana, di mana bencana adalah sebuah peristiwa atau rangkaian peristiwa yang mengancam dan mengganggu kehidupan dan penghidupan masyarakat yang disebabkan baik oleh faktor alam dan atau faktor non-alam maupun faktor manusia, sehingga mengakibatkan timbulnya korban jiwa manusia, kerusakan lingkungan, kerusakan harga benda, dan dampak psikologis. Dan bisa kita bagi bencana itu disebabkan oleh faktor alam, non-alam, dan juga manusia. Sebagai contoh saja, manusia ternyata tahun lalu, misalnya apa yang terjadi di Beirut, dengan menumpuknya satu bahan kimia di pelabuhan bisa menyebabkan ledakan yang sangat menghancurkan di Beirut tahun lalu. Baik. Kita mulai dari bencana alam. Bencana alam adalah bencana yang diakibatkan oleh peristiwa atau serangkaian peristiwa yang disebabkan oleh alam, antara lain berupa gempa bumi, tsunami, gunung meletus, banjir, kekeringan, angin topan, dan tanah longsor. Memang tidak mudah memetakan ini, ya. Seperti kita ketahui, gempa bumi mungkin dengan adanya USGS yang kalau saya bisa katakan memonitor terus, ya, bagaimanakah getaran yang terjadi, ya, dengan menggunakan skala Richter, Mercalli, dan sebagainya, sehingga kita bisa mengetahui apa yang terjadi. Kemudian berdampak kepada tsunami. Namun bagaimana dengan gunung meletus, bagaimana dengan banjir? Kita juga dengan adanya lembaga-lembaga seperti BNPB, BMKG, dan sebagainya, langkah-langkah pengawasan terkait kejadian-kejadian yang bersifat kebencanaan ini terus dilakukan. Namun bagaimana misalnya dengan kekeringan, angin topan, dan tanah longsor? Ini sengaja membuka wacana kita untuk mengatakan bahwa bencana alam itu juga sangat luas definisi yang ada. Kemudian non-alam, bencana yang diakibatkan oleh peristiwa atau rangkaian peristiwa non-alam yang antara lain berupa gagal teknologi, gagal modernisasi, epidemi, dan wabah penyakit. Dan kita sekarang ada, ya, mudah-mudahan kita sudah berada di ujungnya dalam masa epidemi atau pandemi. Kemudian dimungkinkan juga bencana itu berupa sosial, ya, yang disebabkan oleh manusia, di mana definisi yang kita dapatkan di sini adalah bencana yang diakibatkan oleh peristiwa atau serangkaian peristiwa yang diakibatkan oleh manusia yang meliputi konflik sosial antar kelompok atau antar komunitas masyarakat dan dimungkinkan juga disebabkan oleh teror. Sedangkan kejadian bencana adalah peristiwa bencana yang terjadi dan dicatat berdasarkan tanggal kejadian, lokasi, jenis bencana, korban, dan ataupun kerusakan. Jika terjadi bencana pada tanggal yang sama dan melanda lebih dari satu wilayah, maka dihitung sebagai satu kejadian. Ini pun kalau kita di dalam industri asuransi, lalu kita terjemahkan dalam bentuk misalnya saja merefleksikan dalam bentuk deductible dan sebagainya. Baik, kemudian gempa bumi saya pikir kita semua sudah tahu mengenai definisinya. Lalu letusan gunung api, volcanic eruption itu juga menjadi bagian daripada apa yang bisa ditutup di polis properti kita. Tsunami sebagai dampak daripada gempa dan juga bisa saja berupa gelombang ombak. Seperti kita ketahui di sini tsunami adalah serangkaian gelombang ombak laut raksasa yang timbul karena adanya pergeseran di dasar laut akibat gempa bumi. Kemudian bisa juga landslide, ya. Tanah longsor merupakan salah satu jenis gerakan massa tanah atau batuan ataupun percampuran keduanya menuruni atau keluar lereng akibat terganggunya kestabilan tanah atau batuan penyusun lereng. Kemudian terjadi flood atau banjir. Banjir bandang pun dimungkinkan terjadi, kekeringan, kebakaran yang bersifat besar, ya, di mana ada situasi bangunan pada suatu tempat seperti rumah, pemukiman, pabrik, pasar, gedung, dan lain-lain dilanda api yang menimbulkan korban dan atau kerugian yang besar. Kemudian kebakaran hutan, ya mungkin ini saya pikir masalah kita untuk hal ini ada di dua pulau terutama yang mungkin Sumatera dan sebagian Kalimantan. Tapi kalau kita ambil contoh di negara lain seperti di Australia, di Amerika Serikat, ini menjadi satu exposure kebencanaan yang sangat mengganggu mereka dan saya pikir kita harus belajar dari mereka apa yang harus kita lakukan terutama dalam konteks modeling dan kemudian solusi asuransi dan reasuransi yang selalu dengan disiplin mereka siapkan. Kemudian angin puting beliung, ya, yang mana bisa dimaksudkan sebagai definisinya adalah angin kencang yang datang secara tiba-tiba. Kemudian ada pusatnya, bergerak melingkar menyerupai spiral dengan kecepatan 40-50 km per jam hingga menyentuh permukaan bumi dan akan hilang dalam waktu singkat. Ada istilah di dalam angin ini atau storm yang menggunakan skala yang dinamakan sebagai Beaufort Scale. Dan biasanya di dalam konteks Winifred dimulai adanya exposure asuransi diawali dari 8 skala Beaufort atau mungkin lebih kurang 62 km per jam. Baik, ini perlu ditelaah lebih lanjut, tapi paling tidak dari BNPB kita lihat bahwa kecepatan 40-50 km per jam sudah masuk dalam angin puting beliung. Kemudian ada gelombang pasang dan gelombang badai, lalu ada abrasi, kecelakaan transportasi, kecelakaan industri, lalu ada kecelakaan luar biasa yang disesuaikan dengan Peraturan Menteri Kesehatan RI nomor 949 tahun 2004, kemudian kompleks sosial atau kerusuhan sosial atau huru-hara, aksi teror, sabotase, dan kalau kita kembali kepada situasi di mana COVID-19 ini menjadi satu kejadian yang masuk dalam kategori bencana, kemudian pertanyaan selanjutnya apakah dapat diasuransikan? Nah, memang kita kembali kepada definisi di mana risiko itu masuk dalam kategori retail atau dalam kategori korporasi begitu dengan skala-skala tertentu. Mungkin saya bisa share di sini bagaimana kita memilah-milah loss itu dalam misalnya dalam 3 karakter ya, masuk dalam attritional loss, kemudian ada large loss, lalu cat loss. Nah, pada saat dia masuk cat loss tentu karakter penanganannya menjadi berubah dan itulah sebabnya kita perlu adanya satu modeling. Pandemi adalah salah satu kejadian yang masuk dalam kategori bencana. Apakah bencana dapat diasuransikan? Sejatinya memang masuk dalam risiko fundamental. Jadi kalau kita tarik dari definisi risiko itu sendiri, fundamental risk bukan masuk dalam insurable risk. Ya. atau risiko yang dapat diasuransikan karena dampaknya bisa besar, luas, dan bisa terjadi dalam waktu yang lama. Namun industri asuransi telah punya pengalaman yang cukup untuk bagaimana mengelola ini dan outputnya adalah menjamin risiko bencana seperti gempa bumi, banjir, badai, dan lain-lain. Tentu perlu penelaahan lebih lanjut tentang karakteristik dari setiap bencana seperti tadi yang saya bacakan, mungkin lebih dari 10 dari hampir 14 jenis. Dan dalam konteks asuransi, apakah asuransi dapat menjamin risiko COVID-19 ini dengan perlakuan khusus atau istimewa mengingat dampaknya yang sangat luas. Dan dalam konteks retail yang masuk dalam attritional loss, dengan langkah-langkah yang sudah dijalankan bahkan di pusat market asuransi di London, ada memang situasi di mana yang bisa ada kejadian yang memang bisa masuk dalam karakteristik sebuah risiko yang dapat dijamin. Attritional loss bisa kita tetapkan di bawah US dollar 100.000. Large loss mungkin saja 100.000 ke atas. Catastrophic loss kerugian besar yang bersifat katastrofik. Dan dengan situasi di atas ini bisa saja dengan dua opsi. Ya, jika yang terdampak bersifat perorangan, personal medical insurance misalnya, dengan metode policy tailor-made. Tidak jika dia bersifat massal, misalnya business interruption, loss of profit, dan seterusnya. Kemudian apa yang diusulkan dari industri asuransi, salah satunya adalah apa yang dirilis oleh Minihri berupa epidemic risk solution. Ini salah satunya. Apa saja, dibagi 3, who can be insured, how the cover work, and keep optional features. Dan kemudian kesimpulan dari apa yang menjadi pengantar yang ingin saya sampaikan kepada rekan-rekan sekalian adalah bahwa tidak semua risiko bencana dapat diasuransikan secara ekonomis, namun risiko pandemi COVID-19 dapat dimasukkan dalam risiko yang dapat diasuransikan, tentu dengan karakteristik yang disepakati bersama, misalnya tadi masuk dalam retail, kemudian tidak bersifat katastrofik, menyeluruh dan sebagainya ya, tentu. Kemudian epidemic resolution dengan basis parameter insurance yang diusulkan oleh Minihri mungkin menjadi salah satu solusi. Baik, saya pikir ini sebagai pengantar agar rekan-rekan bisa terbawa kepada apa yang ingin kita pahami dalam mengetahui bagaimanakah cat risk management ini dikelola, ya, terutama dengan menggunakan apa yang disebut sebagai modeler, ya, dalam hal ini misalnya RMS sudah bersedia untuk membantu kita berbagi tentang apa yang akan dilakukan. Baik, Pak Edwin. Oke, kalau Pak Edwin, ya, mungkin
sekarang sesi tanya jawab, bukan gitu?
Mungkin saya pikir ini hanya pengantar. Kita langsung saja ke Andrew.
Langsung.
Second session.
Nanti tanya jawabnya setelah semuanya udah menyampaikan makalahnya, begitu ya?
Ya, silakan.
Oke, baik rekan-rekan sekalian. Now it's time to Mr. Andrew Harris.
Thank you, Pak Edwin and Pak Effandy.
Yes. Okay. Please, Mr. Andrew.
Okay, thank you. Good afternoon to all the participants, and thanks very much for joining this afternoon. Selamat siang.
Selamat siang.
Do you have the slides, Edwin, or do you want me to control?
I think. Do you think you can control, Andrew?
Okay.
Okay.
Just, download.
Sudah di ini ya, Abi. Udah di admit ya. Dia boleh share ya, Andrew.
Sudah, Pak.
Oke. Okay, excellent.
Okay, you can
Yes.
see those clearly. Okay, so good afternoon to everybody, and let me share a little bit.
Good afternoon, Andrew.
Good afternoon, everybody, about Specialist Consultancy here in Singapore. As you have heard, my experience in the reinsurance and catastrophe risk management now dates back more than 35 years, living here in Singapore and in Malaysia. And during that time, we have worked with more than 500 insurance companies in that time, particularly with regards to managing catastrophe risk. In Indonesia, we know the market very well. We've worked for many of the major insurance companies in Indonesia, from Central Asia to Wahana Tata to Lippo to many of the companies, Cinemas, etc. So we know the Indonesian market very well. And we are able to bring both a consultancy, a technical capability, which our friends at RMSI will talk about after my slides, and also a broking capability, both for the Asian market and also for the London market. Are you seeing the slides clearly?
Yes, very clear.
Okay. So the first question really we need to, following on from Pak Effandy's presentation, is why is there the need to manage natural catastrophe risks? And for this afternoon's discussion, this really focuses on natural catastrophe perils rather than COVID or other events. So there are three real reasons behind that. One is obviously to protect your customers, and of course to protect the balance sheet of the insurance companies that you're working for, which of course all have a limited paid-up capital. But what we are experiencing and what we have seen over the past 30 years here in Asia is a very dynamic, changing risk environment, particularly with urbanization. If you look at what happened to Jakarta, cities like Surabaya, the development over that period has been huge. We've seen in a lot of Asian countries, including Indonesia, the damming of rivers, changing floodplains, changing government policies on infrastructure development as each different government comes to power. So what that has taught us as an insurance industry is that we must expect the unexpected. And as you may have heard and listened to some of the speeches at the latest climate change COP26 conference in the UK, it is generally acknowledged by everybody that there has been an increased temperature gauge of about 1.5 degrees centigrade. Sea level and sea warming has increased the risk of flooding in low-lying areas, increased rain intensity and droughts in all sorts of different parts of the continents. So that is a new reality that we're facing. So I wanted to try and put this in perspective of where we are now from what we have seen over the last 30 years here in Asia and including in Indonesia. So firstly, my first experience of an earthquake was in 1990 when I was visiting the Philippines. And we were the lead reinsurance broker for the government insurance company, which is called GSIS, so the equivalent of JASA. And there was a huge earthquake in the north of the country, in Baguio, which is about 400 kilometers away from Manila, the capital city. So in an Indonesian context, you can think of Bandung versus Jakarta. So the earthquake was 9.0 on the Mercalli scale. So it was a very significant earthquake. And the critical factors were that the earthquake caused damage along the fault lines of the earthquake, of the plates underneath the country. And RMS will show you some of the plates that exist here in Indonesia later. So the damage was directly correlated to the earthquake fault lines in the country. And as you can still see today, 30 years later, 32 years later, you can still see damage to government buildings in Manila, such as the Arts Theatre in the center of Makati. And these buildings were abandoned after the earthquake. You can see huge cracks down the pillars of the buildings. So these buildings were evacuated and never used, and they have just been left as a monument to the earthquake damage from 400 kilometers away. So when an earthquake occurs, it doesn't just affect a small area in the epicenter of the earthquake. It affects all the way along the fault lines. So think of Jakarta all the way to Bandung. So other important aspect was that there were damages to many of the government buildings, which were hospitals, schools, shops, hotels, etc. And even today in the Philippines, government buildings are not insured. I have been a consultant for the Philippine Ministry of Finance for several years. We finally devised a scheme to insure all the government buildings in 2019, but because of COVID, the government budget was cut, and so the scheme has not yet been put in place. So the other feature you'll see from the pictures on this slide is that many of the sort of lower multi-story buildings in this era, 10 to 12 to 14 story buildings, just collapsed like a pack of cards. And that caused huge number of fatalities, 2,500 fatalities. And many of the buildings had no adherence to the building codes. Then in the next decade, we of course had the huge Sumatra 2004 earthquake and tsunami, which of course devastated Indonesia and caused 130,000 fatalities. It was the holiday season for us here in Singapore. I was living in Singapore. It was Boxing Day, so the day after Christmas. And many of our friends were affected, not just in Indonesia, but in Malaysia, Thailand, in Phuket. Many people were on holiday, and in Sri Lanka, in the south of Sri Lanka. So it wasn't just a single country event. Homes and particularly hotels, which were of course next to the sea, were completely devastated. But what we learned from this loss, because we had insurance company clients in all those countries, was that less than 5% of the damage was insured. Then in the next decade, we had the 2011 Thai floods. So a different event. And this affected mainly Bangkok and the surrounding areas up to a radius of about 60 kilometers. And this turned out to be the largest ever insured flood loss in Asia in its history, at around 16 billion US dollars. And the reason for this was that one of the worst impacted areas was an industrial park, which had 6 of the major car manufacturers, which included the 3 major Japanese manufacturers for Honda and Toyota. And the flood, because of the rainfall and because of the lack of runoff of flood water, which had been exacerbated by poor development, lack of drainage, the flood lasted for 6 weeks, and there was excess of 6 foot of water in most of the flooded areas. What then compounded the loss was that there was politics involved, and one of the senior cabinet ministers in the Thai government insisted that one of the floodgates on the rivers in the dams was opened, thus flooding a particular area of Bangkok, but protected an area close to the city center where his political supporters were. So the loss was increased substantially by the act of politicians rather than natural events. And that caused a lot of concern with reinsurers, with Swiss Re, with Munich Re, with ACR, trying to establish really what was the duration of the loss and whether this type of political interference was an insured event. It also caused the collapse of the national reinsurance company of Thailand called Thai Re. It only had reinsurance protection up to $100 million, and its loss was 700 million. So Thai Re collapsed. It was bankrupt. It got bailed out by the government, and it is still to this day owned 35% by Berkshire Hathaway from the US. So still to this day, we learn many things from what happened in the Thai flood. Another event that I want to talk about briefly is what happened in the same year in 2011, 2010, was in Christchurch, New Zealand, a small country, only 5 million population, but they had 2 earthquakes 6 months apart. They were smaller on the Mercalli scale, only 6.3 and 7.1 respectively, but there were 8,000 aftershocks. The insured loss was 13 billion New Zealand dollars, which is about 10 billion US. And as you have in Indonesia with MyPark, they had an earthquake commission and insurer, which had $6 billion of reinsurance protection. So the first loss exhausted their reinsurance protection. They then had to pay reinstatement premium, so the coverage was reinstated. And there was then a second loss, which then also destroyed the reinsurance protection. So the National Earthquake Commission, effectively, whilst it was government owned, also became bankrupt. There was also a local insurance company called AAAI, which also went bankrupt because none of the insurance companies ever anticipated the extent and the number of household insurance claims, because this earthquake affected the city center of Christchurch, not the capital city. It's in the south of the island. So a population of only 1.5 million, but they had 300,000 claims from household insurance policies because all these policies were insured under the Earthquake Commission and with private sector insurers. But the insurers just couldn't cope. Most of these insurance companies had 10 people in their claims department. So how could they suddenly handle 300,000 claims? It took 3 years for the claims to be paid, and many people had to live in a tent in their garden, suffering all the aftershocks. So it was completely devastating. There was another additional factor, as you can see in the top picture on this slide, is that the ground became liquefied. So this bus and this car are not sunk in water, they're actually sunk into the tarmac of the road, which due to the energy that was dispensed by the earthquake effectively melted and caused huge amounts of damage to the city center. After the loss, after the event, this ground solidified and parts of the city became completely uninhabitable. So if you go to Christchurch now, about 1/3 of the city, which you can see on the second photo, is in the red area, which is where the liquefaction took place. There are now huge parts of the city which are deserted, not demolished, just left. And a whole new part of the city has been built in areas that weren't affected by the liquefaction. So there was a huge infrastructure and government rebuilding of the city as a result of this earthquake. So final loss event I want to talk about is Lombok, more recently in 2018, 6.9 on the Mercalli scale. But the earthquake impact is always affected by the depth of the earthquake. And this is relatively shallow. Some of the earthquakes can be up to 50 kilometers below the ground, so the impact is quite negligible. But here it was a much shallower depth. And there was also some tsunami damage as a result of the earthquake. So this only affected the north part of the island, but 80% of the buildings were damaged in the north of the island, and also, of course, affected the adjoining island of Bali. There were 417,000 people displaced from their homes. So there was a huge effort needed to rebuild houses, to provide emergency relief for people just to have fresh drinking water and electricity, etc. But again, the insured loss was quite negligible. It was only about $100 million. But the infrastructure that was damaged was quite sizable. And of course, there was a big impact to the tourist economy, for which Lombok is famous. So no overseas tourists visited. Of course, this was pre-COVID, but no tourists wanted to visit Lombok because of the impact of the earthquake. And it remains to this day, the strongest earthquake ever recorded in Lombok. So all of these loss events I've highlighted were unexpected events and left many parts of the industry unprepared. So what have we learned from these past cat losses? Well, government, the community, insurers generally are pretty poorly prepared for a major catastrophe. If we go back in time, in the 1990s, insurance companies that I used to visit in various countries in Asia, including Indonesia, had handwritten block cards of their catastrophe exposures. So these were written in pencil. Every time an underwriter wrote a risk, he had to dig out the box of catastrophe cards and add on the exposure. So it was very simplistic, but there was a record at least. From about 2000 onwards, when computerization really came into the insurance industry, then there began some simple recording of the catastrophe exposures. Then with reinsurers like Munich Re, Cresta zones began to be defined in the various countries. And also different perils were then defined as well, so flood in particular, and the areas were then mapped. So there was the beginning of, in Asia, professional mapping companies, AIR, RMS, etc., that started trying to map these perils into different areas of the country. So then we found that when we started to analyze the exposures that insurance companies were recording, including in Indonesia, it was pretty rudimentary. It was pretty basic. So we found that risk details such as the age of the building, was there a building code in place where this high-rise building was erected? What are the number of stories? What is the distance to the river? Has the river flooded in the last few years, in the last 10, 20 years? All of that data was not recorded by the insurance companies. So the results of the modeling of these exposures didn't give a very granular and well-informed output. It's only in recent years, from about 2015 onwards, that the CAT modelers have produced technology that enables them to make much more country, area, and peril specific using better quality data. But still in parts of Asia, we need to improve the quality of data. When we look at and visit many of the Asian insurers around the region, if we ask how many of them use Google Maps or satellite technology to determine their cat peril exposures, probably less than 10% would undertake this type of analysis. So it craved the need and the requirement for online analytical tools are now an essential part of catastrophe mapping. And that's what RMS will talk to you about. I just briefly mention what that will cover. And that really is looking at the catastrophe per risk assessment, so individual risk assessments, a peril by peril analysis. It will help monitor accumulation, providing risk scores by those specific perils. And it provides you with both visual and online portfolio accumulation management reports. So you as the insurer have a much clearer picture of what your exposures are, where they are by peril and risk assessed. And that is all done digitally online. So on that basis, I hand over to Pushpendra to carry on the next phase of the discussion.
Thanks, Andrew.
Okay.
Good afternoon, everyone.
Good afternoon, Pushpendra.
Good afternoon, and good afternoon to all the participants also who are part of the webinar. I hope in these COVID times, everyone is safe and sound, and the families are doing well. So let me get started quickly. So I will do it in two parts. So first, I will walk you all discussing about peer online, what its core capabilities and strengths are, and thereafter we will go into a live demo of the solution. So just to kick start, RMSI is a catastrophic risk modeling company, and we have been doing this for like more than 3 decades now. RMSI is an offshoot out of RMS. Until 2011, we were a wholly owned subsidiary of RMS. But in 2011, we did a management buyout, and now we are a totally independent entity, having 5 global subsidiaries in Australia, Canada, UAE, UK, and USA, and with a strength of about more than 3,500 plus employees. And RMSI has been ranked as the #1 company to work for in multiple surveys conducted by various agencies, and this has happened ahead of the likes of Google, India, and TCS, which is a formidable company out of India, Infosys, Wipro, etc. At RMSI, we are a very highly quality conscious organization. So we have all the necessary certifications, whether they are related to software development, where we are at the topmost level of CMMI, or it is data, which is ISO 27001, or it is HR practices with ISO 14001-2004. So basically focusing on quality in every sphere of the organization. And at this point of time, we are working with more than 150 global clients. I am happy to inform you that in terms of insurance sector, we have worked with a lot of companies, not only in India, but also outside of India. And we have also worked very closely with the multilateral funding agencies like World Bank, Asian Development Bank, United Nations Development Fund, etc. So what we do, we are basically an organization that assesses the risk from any of the natural hazards or even man-made hazards, and projects the outputs for utilization, not only just by the insurance, but also by the governments. So we have been modeling all the different kinds of natural hazards that could happen and their impact to buildings, to agriculture, to population, everywhere. So with that, I'll move on to the focus of the discussion, which is peer. So what was RMSI's, even before I talk about peer, which is profiler for insured exposure and risk, I would take a few seconds about why we developed it. There are already a lot of CAT models available across the globe, and our old parent company RMS is one of the pioneers in that. And then we have AIR, we have EquiCat, and now with Oasis platform, a lot of other small vendors are also joining, and contributing those CAT models. But I personally feel that just like quality, risk is also best handled before we pick up the risk rather than after we have picked up the risk. The point I'm trying to make is that today all the CAT models are used once the insurance, the portfolios are already there. We analyze them, and then we decide, okay, what would be our potential risk, and accordingly we go for reinsurance protection. What if you decide that even before you underwrite a risk? So that was the motivation for developing peer. And initially, we developed it for India, where it has been it got a lot of success. And right now, nearly all the private insurers in India are using peer for underwriting and exposure accumulation also. And then we have expanded it to a few countries in Asia, including Indonesia, Philippines, Vietnam, Malaysia, and Cambodia to start with. We intend to expand it further as the utilization of the product in the region becomes more and more ingrained. Peer was launched in 2009 in India. And in 2011, at the SIRC conference, it was adjudged the technological innovation of the year. Thereafter, in India, peer hasn't looked back. It has been growing, and more customers are getting added. In reality, not only the insurance, but also a lot of forward-looking builders in India are also using peer. So they They are, before they start building, before they put their structural specifications in place, they come to us and they ask for what is the location, what is the risk profile of this location where I want to build this structure. So at this point of time, Peer is focusing on flood, earthquake, typhoon, tsunami, volcano. Or these are the key natural hazards that we have brought in. We are looking at the hazard both from historical and probabilistic hazard perspective. And what we have done is we have created RMSI's risk scores using various hazard maps to support the development of underwriting strategies. So Peer initially, when developed in 2009, was a hosted platform. So any insurance company, if interested, would have to have a server of their own where the platform was hosted, and then across their entire offices, they can access it. So we brought in Peer Online, and at that time, Peer Online was the first pay-per-use risk management portal for the insurance sector. So what we did was each and every capability of Peer, we made it pay-per-use, rather than straight away going and purchasing the license. You can license various functionalities of Peer based on your need and based on and the quantities. So what we did was we split the entire capability into 5 key aspects. One was the location risk profile report, using which you can get the risk profile for any location. Then a dynamic exposure accumulation profiling, wherein you want to understand exactly how your exposure is spread out with respect to the hazard risk that is there. Then a detailed location risk assessment. For example, if you are looking at a big industrial plant where one single location based report is not enough. So you want to do some detailed analysis. It's a plant which is spread across maybe say in a kilometer or maybe more. So then different parts of that area would be impacted differently. So you want to do a detailed risk analysis against the hazard maps. So the application provides that capability also. Then we also realized that not everybody wants a dynamic exposure accumulation. Dynamic exposure accumulation means that your exposure should be changing fast enough, so that at least within every 15 days you are adding 1,000 policies or maybe more. But if you are a smaller insurer where you are getting these volumes in say a quarter, for those we brought in the exposure accumulation profile report, where they can opt for a report by quarter or half yearly or annually, whatever fits their budget and need. And then finally, the exposure accumulation for live events, because we also realized that live events, whenever there is a live event, the insurers always want to know. They have that worry that what is the kind of potential claims that we could get. So if you are able to do exposure accumulation only, that will give you the worst case scenario, that if the entire exposure gets impacted. But over the years, you have an idea, and then you can apply your own factors. The actuaries in those companies can apply their factors on top of that to come up with that, okay, this would be the potential value for the loss. So that is the whole idea. So these were the 5 different capabilities into which we converted Peer as a Peer online pay-per-use portal. So what you are seeing below is an image of that, and as we will go through the demo, you will see the same thing again. So in terms of the key functionalities, while I have already talked a little bit more insights into how does it support underwriting. So you can get, as I said, you can get risk profiles at every location. You give the latitude, longitude, you search the name of the location. If it is available on Google, it will automatically zoom into that area and pick up the lat long and then generate a risk profile for that area. A lot of times it is also possible that that particular location that you are interested in, if it's an industry or something, is not there on the Google. So it gives you the ability to zoom in, identify a specific location, and then create a database of all those high profile locations that you want to track year after year. And there it also gives you the flexibility to record additional attributes that could be specific to that particular risk. So it is possible that, for example, if you are looking at an industry, you may like to identify what are the different kinds of buildings that are there, what kind of use the buildings are being put to, so on and so forth. Similarly, you may like to also record that do they have any hazardous material which is being used, etc. Whereas if it is a big commercial complex, these are not the attributes of your interest. The attributes would be different. For example, how many stories are there? What kind of, is it a steel structure or not? You know, so a lot of the characteristics that you want to track for these high profile exposures will vary from the usage of those exposures. So it gives that flexibility, and I'll demonstrate that to you later on. Now, with all this information, and the risk scores that are provided, you can create an underwriting strategy in terms of that if the risk goes beyond this value, then it has to be, for example, inspected. Or if the risk is beyond this extreme value, then we may not underwrite. If it is within this range, then we would like to control the discounts that we are giving. You know, so those underwriting strategies would vary. They will be insurer specific, and that will bring in their own specificity to the way they want to do underwriting and the value add that Peer will bring into that process. The next set is the key perils that the application focuses on. So typhoon, flood, earthquake, tsunami, volcano. And as I said, we are bringing in the historical flavor in terms of where the events have happened. If it is flood, then what kind of flood extents were there for the historical events. If it is then, because different hazards have different needs and different inputs. So for typhoon, it's the landfall locations, the tracks of various typhoons, the distance to coast, bands. So just on the basis of bands, you can create your underwriting strategy. If it is in this band, then the discount will be this much. If it is in the external band, I'm not going to underwrite. Maybe not. Or maybe you may say that I would like to charge the full premium that I can get. Because in most of the Asian countries, the CAT rates are fixed. And so the only thing, flexibility that the insurers a lot of times have is if the policy is bundled. For example, if it is bundled with fire. But fire, the rate is not controlled. So you have that flexibility of managing the rate or managing the discount on the fire side, and then keeping the rates fixed and intact on the CAT side. So for different hazards, different types of data sets are there. As we'll go into the demo, I'll showcase that. And the application gives you the ability to visualize. So seeing is believing, and seeing makes it easier to take decisions. So that is where PIR excels. So it not only gives you the hazard data, but also helps you visualize that data over your exposure. So moving on to accumulation, the key capabilities for accumulation here are, of course, you can bring in all your policy data. If it is at policy by policy, you can bring it at that level. If you have aggregates at a specific admin level, then you can bring it at that admin level also. What application does is, once you bring in all those aggregates into the application, it gives you the ability to correlate it with the underlying hazard risk information that is there within PIR, and it gives you an idea of how much of your exposure is lying in very high risk areas, how much is lying in very low risk areas, and thereby now that gives you a view of how your underwriting has been going on so far. To support that, PIR also gives you an ability that you can create your own thresholds. That, okay, in this particular area, because the risk is high, I will not underwrite more than this amount. In some other area where the risk is low, I would like to underwrite more. That also gives you the idea of how you need to tailor your marketing and sales strategies based on the inputs from the risk perspective. And then accordingly, you can set up the entire, basically you can create a target portfolio at the start of the year, feed that target portfolio into PIR, and then track it as the time progresses to see exactly whether your underwriting is working to the plan or not working to the plan. And based on that, if you need to make any changes to your plan, then you can do that and reflect that back into the system, and then the system will start to track the new plan that you have put in place. Then on top of that, a lot of times we all understand that natural catastrophic risk is not admin boundary friendly. So it's not that if you are in this district, then you are safe, but the district next to it, everything changes. Natural catastrophic risk doesn't really follow the administrative boundaries, and in fact the international boundaries also. So what we need to, this basically gives rise to the fact that admin boundaries may not be the only way that you would like to track your accumulation. You may like to track your accumulation based on the way you see that the risk is unfolding or could potentially unfold. As a simple example, let us assume that there is a traditional market. Now, we all live in countries where there are traditional markets, where there are lots of shops just next to each other, back to back, selling clothes, selling ornaments, selling different kind of things that are of the need of the people, right? Now, let us assume that you are an insurer who is picking up a lot of those risks. Now, it is possible that that entire market is spreads across 2 postcodes. Now, if you try to aggregate by postcode, it may not serve the purpose. You want to see the holistic picture, because you feel that if there is a fire, there is a potential that the entire market may be impacted. So you may like to create a risk block of your own that covers the entire market, rather than just tracking it at a postcode or a district level. So that flexibility also PIR Online gives you. It gives you the ability to create your own risk blocks and track your exposure accumulation within those risk blocks. These are a few sample reports. We will be going through them in the demo, so I won't spend any time here. These are just talking about the key data sources that we have used to get an idea of the hazard. And so the admin boundaries are from UN OCHA, and active faults from GEM. Elevation, we have used the SRTM. soil data is from FAO, and so on and so forth. So specifically, the most challenging was volcanoes, where we were finally able to get a good hazard representation from the Volcanic Global Risk in Identification and Analysis project. So we interacted with them also. We had a few discussions with a few people there, also based on some of the questions that we had on the report that they had provided. And then we combined all this finally to create risk zones using RMSI's approach that we had earlier applied to India, but then we extended it and to these countries. Next comes exposure. As I said earlier, also you can import your exposure data, whether it is at policy level or it is aggregated at any specific admin level, into the platform. The application by default supports Excel. So if you have those exposure in an Excel format, those could be readily imported. But if you are, if the insurer is using some underwriting platform, then the application can be made to work directly with that underwriting platform to integrate and pick up the exposure data directly, rather than someone bringing it out into Excel and then putting it into, importing it into PIA. Now, why the key differentiation of PIA is, as I said right in the beginning, is the real motivation of creating PIA. PIA is a pre-underwriting risk analysis tool, not a post-underwriting risk analysis tool, just like all the other CAT models that are being used today. So it gives you the flexibility to assess the risk before you bring it onto your book. It gives you the ability to make a strategy of how you want to spread your risk, where you would like to take, at what point you would stop taking. So you can make all those decisions, and you can define those decisions through this platform, and then ensure that your underwriting finally is following what was planned. Of course, we are talking about online. It is available to you in an online mode as a SaaS, as well as if someone wants to have it hosted, that's not a problem. Whatever is hosted on the cloud could always be hosted within the firewalls of any insurance company. We have had customization requests from different insurers, so the platform is very flexible, and it caters to the needs of specific insurers, and those customizations could be built. So it's not like it's cast in stone that you have to use exactly what has been built. So there is that flexibility to bring in your flavor into the model. Pricing, as I said, this is pay-per-use, so it brings in a lot of flexibility, and I have a slide specifically that where we will see exactly what level of flexibility we get with that. Training, we focus a lot. It's a very simple application. As I will go through the demo, you will see that. But still, we have kept 3 half-day sessions that could be conducted over a period of time, and some of those could be direct also, like by visiting, or could also be done online. The preference is online because of the situation, travel restrictions today. And then there is a support email. The support process is already in place. It's tested in India because there are already PIA already has a lot of users who are constantly using peer daily. So talking about the pricing structure, to start with, we can see that peer can be used in a SaaS mode online or in a hosted mode. If it is hosted mode, you have the flexibility to license the full package, or you can license risk profiling or accumulation monitoring, both ways. When it comes to online SaaS, then you have a lot of flexibility. So once again, risk profiling and accumulation is separate. Then within risk profiling, you can go for pay-per-use, where there is a rate associated to every report that you can generate, or you can use in a weekly, monthly, biannual, or annual rate formats. So obviously, in both the cases, there are volume discounts. At a certain point, these volume discounts start giving you these rates, which are biannual and annual. Accumulation, once again, is pay per use, or you can pay as you use. Both the flexibilities are there. So you have a flexible fee portfolio analysis. So you want to do it whenever I want to do an accumulation. I'll upload my portfolio, do the accumulation, and I'm done. That is also possible. If, on the other hand, you want to do a dynamic exposure accumulation monitoring, you can go for biannual or annual options that basically give you a lot of volume discounts. So these are some of the key clients that we already have that are using peer or have used peer for different purposes. So from here, moving forward to the demo, let me just quickly move on to it. So I hope the sidebar. Are you still able to see my screen? Are you able to see the peer online login screen?
Yeah, you mentioned here Jakarta flood advisory.
Yes. Okay. Yes, absolutely. So this is just as an example. So let me just log in here, and we'll quickly run you through the demo. As I said, here, even online mode, you have that flexibility of just going for risk profiling, just going for risk accumulation, or for the entire thing. We'll use the peer online, which has both the capabilities into it. Let me see if I can move it somewhere so that it doesn't interfere with the demo. Maybe here. I guess that's a better place, so that I can pick it up and move it later. Okay. All right. All right. So this is the starting screen, and you have the flexibility of selecting the country. I have already selected Indonesia at this point of time, so that the application automatically zooms into Indonesia, and then whatever we will do, it will be done only for Indonesia. If someone is interested in some other country, they can do that, or if they want to combine 2 or 3, they can also do that. So there is entire flexibility there. So this is the organization. On the left hand side are the action layers in terms of all the hazard layers are under layers. As you can see, for earthquake, flood, tsunami, volcano are there, and composite risk profiles, your policy locations that you have uploaded earlier, and the administrative boundaries. Then we have the accumulation monitoring, that gives you the flexibility of visualizing your exposure on the map at by country, admin level, line of business, peril, and coverage. Then we have the last 2, which is the risk blocks. As I talked about, you can create your risk areas of interest, and the user locations where you can create create a database of your facultative portfolio directly, because these are large risks where you want to capture all the additional attributes that you can. A lot of times, separate risk inspections are also done for these kind of policies, and a big report comes back, so you can capture some of the key aspects of that report also and put it here along with the location, so that you have a readily available information that the underwriters can always have access to. At the top here is the toolbar that has all the different types of tools. As we will go through the demo, I will walk you through, but we can organize them into 3 or 4 key categories. The first set are more related to the mapping tools, where the next set are more towards focused towards once again mapping, but you can do some kind of measure, etc. Those kind of tools are there. Then it's the information you want to capture. Then it's import, your location level exposure import. Thereafter, we have the accumulation reports over here. So risk block accumulation is here. Then predefined accumulation reports by risk zones and by admin boundaries, etc. And finally, user management, etc. And then on the right-hand side is your location risk search. So you can type in any specific location of your interest, and then if it is found, you can directly immediately generate a risk profile report by clicking this button. So and the center you can also basically is the mapping area. Let's start the demo. I will start with the location risk profiling. Thereafter, we will look at the various hazard layers, and then we will go into accumulation, visualization, and then how to create risk blocks and the user locations. Let's start with now here also you can go by a location wherein you know the name of the location, or if you want to generate this report for any specific admin level, for example, district or so it gives you that flexibility that you can go do it by district, or you can do it by village, or if you want to do it by location, then you can do it by location. So in the interest of time, I will quickly start the search. Let me type in a location search. As you can see, there are lots of locations that will match the name. They will show up. You can pick up the one that is of your interest. So I'll pick the first one. And I can click go. As soon as I click go, it zooms into the area where that particular location is, and gives me a quick view of the risk profile right here. If I am in a hurry and I just want to quickly get some idea what are the risk scores. So the risk score for earthquake is 6 out of 10. For flood, once again, 6 out of 10. So a high flood risk, a high earthquake risk. There is no typhoon risk, but the volcano risk is maximum, is extreme. So that is why the composite risk score for this particular location is high. So this information you can directly get even before, without generating the report. Once we have done it, then we can just click on the report, and this report will get launched. And as soon as the report is there, I'll walk you through. The report generation part takes a little bit of time, because you can assume that there is a lot of information that is being extracted for this particular specific location, and the report is being generated. So here we have the report. Let me just quickly open it up. This is how the report shows in. So this is the risk profile report for this particular location, and it gives the complete address along with that. As you can see, I had only typed Secara. whereas it picked up the remaining name of that particular location along with the address that was available. So what you see here is the information that we were able to see right there on the screen here also. This information is the summary part of the report that you are seeing here. Basically talks about which seismic zone it is in, what kind of soil we have, what is the distance of this location from the coast, in terms of elevation, how much elevated it is, and then the risk scores for earthquake, for flood, for volcano, and so on. Now the table below gives you an understanding of how to interpret these values. So if it is 6, then it is high for earthquake. If it is 6 for flood, then it is high for flood, and so on and so forth. For all different types of hazards, you can understand what various risk score values mean. And these risk scores are the risk scores created by RMSI using all the hazard data that we have been able to get from multiple sources. Moving on, thereafter, page by page, we are going to provide additional information for every hazard specific to this location. So these are all the historical earthquakes around this location. It's a map of all those, and you can see how the magnitude has been categorized into various into 4 themes. And then you also see the list of 5 largest events within 100 kilometers from this particular location. You are seeing all the earthquakes that have a risk, that have magnitude 5 and higher around this location, and how far those epicenters were. And it also shows you if there is any active fault within 100 kilometers of this particular location. So additional information giving you an idea why the risk is high. Similarly, moving on to flood, we have major rivers around. This is our location of interest, and these are all the river channels around this area. And then it also gives you within 25 kilometers what are the different streams from this particular location. So the closer the stream to the location, the more is a potential perceived risk. Now, why I am saying potential perceived risk is because there is a chance that that stream is all the time dry, right? So if that is the case, then the risk in reality would be low, but the potential perceived risk is high because there is a channel next to it, and there is always a possibility with the kind of climate change scenarios that we are going through, that who knows that tomorrow there is a sudden rainfall, huge amount of rainfall in that area, and that the stream starts to suddenly flowing or overflowing. Similarly, it also tells us that has this location been part of any historical flood? So as I said, we have captured the historical flood extents for as many recent historical events that we could get. So it gives us an idea of whether that, so we are seeing that this particular location was a part of 2 historical floods, immediately giving an underwriter an idea that the risk is high. Now, in case of flood, there is another aspect associated to it. If it is a commercial complex and the policy is being underwritten on the 5th floor, then you can still underwrite it. So that is the advantage, and I'll tell you why you will be able to do that as well. Go through the layers after this. So that is why the detailed risk assessment comes into the picture. Similarly, going into volcanoes, these are the locations of the historical eruptions that have happened. And these are the volcanoes around this area. And along with the distance of this particular point from all these volcanoes. And similarly, going into tsunami, then since this is closer to the coast, how various the tsunamis from various earthquakes is plotted here, and how far they were from this. So this is a quick look at the risk profile report that gives you a detailed risk profile of that particular location for the click of a button, basically. Let me just close this, and then let's come back here. Let's see what more can we do. So if we go into the layers here, as I was talking about, so within the earthquake, you get a lot of additional layers that you use for your detailed risk assessment. For example, seismic zones, which zone it is falling in, which are the faults. While we have already shown you the fault that is closest, but you can also see it on the map. We have the report also covers the historical epicenters. You can see mapped also. And here is the risk score, which gives you an idea of what is the risk score zone that this particular location falls into for earthquake. And this is where, so let me, similarly, we go into, but we also have a return period. So we have a 475-year return period map here that gives us an idea that what is the shaking at this particular location for a 475-year return period event. If I want to do that, I can click on this Get Info tool here at the top and click at this particular location. Sorry. And get an idea of what would be what is the peak ground acceleration in meters per second square for at this particular location. So for a 475-year return period event. Now, moving on from here to flood, you will realize that this information would be a lot more interesting and relevant as we will go through. So these are the various river channels, and while these are also being used in the basins are there, but here is the historical event, and you can see that this particular location was part of the historical events in the past. This is you can also click on the flood risk score, and it gives you an idea what kind of flood risk score you are going to get over here. While it is already there on the report also, the interesting thing comes from the return period. Now let us see if I go for a 100-year return period flood. Now this is where I have some information. Once again, I click on the info tool and click over here. To get an idea of what is the kind of elevation we are getting here. So the 100-year return period flood could cause a 3.5 meter event at this particular location. Now we can understand that 3.5 meter basically means that the water could go up to the first floor, right? But if you are, it's a commercial complex, and if you are underwriting on the 5th floor or 6th floor, you can still underwrite while you know that your structural damage and your content damage will not be there, but you will get claims for BI, business interruption, because if that area is not accessible and the office could not be opened, people are not able to go there, you may get a BI claim, but the structural and the content damage will not be there. So this is the additional detailed analysis that you can do using these layers over and above the risk profile report to make your judgment better, to take a call on whether to underwrite or not. If I want to underwrite, what I know now, what is the kind of risk that I am bringing on the book. And based on that, if I have some play on the pricing, whether in the form of I can change the rate, if I cannot change the rate, can I change the discounts? If I cannot change the discount on the CAT, is it part of a bundled policy where I can control the discount on the other non-CAT perils? So similarly, moving on to, we can also go for look at for the historical tsunamis that have happened in the past around this location. We have the tsunami risk score also. And you can, as you can see, that the tsunami risk score won't really go too much inland. So, and we also have a 475-year tsunami return period map. Since let me see how I'm doing against time. So time is short, so let me just quickly start moving forward. Volcano is an interesting hazard. There is a lot of volcano risk in Indonesia. And so historical volcanoes are there. If I zoom out, you will be able to see for the entire region. And we have created the risk score also for volcano for this particular area. So if I can try to zoom out a little bit so that you can visualize that. So this is how the volcano risk score is plotted. And then finally we come to the composite risk score, which basically gives us an idea of what is the composite risk across the board based on all these hazards, mining whichever hazard is where, and associating a weightage because of the kind of risk a specific hazard brings to that specific area. This is the detailed risk assessment part of the functionality. Let us now go into accumulation visualization. So as I said, we have this ability to import exposure. If you have your policy data in the form of either policy by policy or aggregated at any level, you can bring it into an Excel-based import, and the import process will help you map your columns so that you can import your data. So once the data is imported, I'm kind of running fast now because I am left with only 15 more minutes. I have a lot to show. So, for example, we have Indonesia. We can select the area of interest. For example, I say that I want to visualize at district level. I want to select all my lines in terms of perils. I want to say pick up earthquake, and I want to pick up all the coverages. And when I click that, it basically gives me this kind of a map using which we can see where we have the high pockets, where we have much higher exposure, where we have a lesser exposure. Now, this is a visualization that you can utilize for a lot of different purposes, not just for the risk, but also to understand where there is more room for expanding. And maybe there is no risk, but there is not much to underwrite, or if it is, there is a city or areas or industrial areas where your penetration is not there, and you can target those areas. Now, in addition to this, what we have here is a countrywide risk accumulation report, and let me just quickly write it. This is like a one single button report that gives you the correlation of your risk with respect to the risk zones. How much are you accumulating in extreme, high, moderate, low, and no risk zones, and that you can use as a mechanism to once again channelize your underwriting. Maybe you have already underwritten too much in the in high risk areas, and you would like to focus in some other areas. So that way you are able to control that your underwriting practice is properly focused. What happened? Okay, it's coming. So this is how the exposure accumulation report looks. It talks about, gives you your exposure accumulation for these 4 hazards and across these different kinds of risk zones that we are seeing here. So, for example, here we can see that this is for earthquake against seismic zone and the earthquake risk zones. You are seeing that this is where you will start seeing the value of this high resolution risk score zones that RMSI is providing. Now, we all know that the seismic zones are quite coarse. So in extreme, you are seeing that there is a lot of risk accumulated. But whereas in reality, the real extreme part, there is nothing here. Everything is from high. So that visibility you are able to get, that just by going with the seismic zones, your view could be very different as compared to a high resolution risk zones provided within peer by RMSI. Similarly, historical floods, you can see, I'm not sure if you all are able to see. Let me just increase the size. Sorry about that. So hope this will be more clear and more readable to everyone. So it gives you how much are you exposed, how much have you accumulated in any of the historical flood extents. This could also be interpreted as if the same event repeats today. This is your exposure, entire exposure. Once again, please do not confuse it with loss. This is your entire sum insured accumulated within this flood extent. So if this flood happens again, this much of your sum insured is at risk. So this is what this report is telling you for flood. So it gives you for all the historical events how much you have accumulated in the historical event area. If that event happens again, then this is the kind of risk that your sum insured is exposed to. Then this is your as I said, there was a high resolution flood risk zone. Similarly, earthquake risk zone. Similarly, there is a high resolution flood risk zone. And this table gives you an idea about how much have you accumulated in various flood risk zones, categorized from extreme all the way to negligible. And by looking at this portfolio looks very well balanced, as you have least in extreme, then in high, then in medium, then in low, and maximum in negligible. Now, there would always be challenges because more demand will come from areas where the risk is going to be high. So that is where you will have to balance it, and that is where this kind of information gives you the insights that how much it is today and how you would like to do it moving forward based on what kind of reinsurance protections do you have. Same way for tsunami and same way for volcano risk. Exactly, the process of reading the table is exactly the same as I explained for flood and earthquake earlier. So this is a quick view of your entire exposures distribution against the risk that is posed by these 4 key hazards in Indonesia. And once you have brought your exposure in a single button click, you can get this view. So coming back to this, let me just clear. this map so that we can now let's go to the risk blocks. I talked about the risk block earlier also. So let me just quickly zoom in, say here, or let's say this is the risk block that I have already created for an airport. I can map it. It immediately takes me here. Now this is a risk block that I had created earlier. I just want to quickly run you the report and show you the next feature. And if time permits, I will come back and show you how to create this block also. So here, once the risk block has been created, here is the tool that you can use. This is, as you can see, add risk block. And it's like a freehand drawing. Once you click this tool, you click, and it will create a polygon for you. And once the polygon is created, you can name it. And just like I have given it name, airport area. And once you have done that, you can click on this report button, and it will generate a exposure accumulation report under this particular risk block. So this is the exposure I have by the 3 various lines of business within this particular area. And this was by sum insured, and this is by policies. I have got three policies too. So total 8 policies here, out of which I have a few in motor, a few in fire, and 2 in engineering. Then I can move to the next page, which gives me another view. Now, this view shows me that against my total sum insured, how much sum insured is for policies where the deductible is less than 10%. Now, incidentally, in our portfolio, everything is less than 10%. So you are seeing exactly the same figure in both the cases. But the whole idea of this is to give you an idea of how much exposure, how much sum insured you have where the deductible is less than 10%, or something else. Now, once again, this is where the customization, for example, can come in. You may say that no, I want to do it for 15%. I want to do. Someone may say I want to do it at 20%. Someone may say no, I want to do it at 5%. So those flexibilities can always be embedded within the software. Then it gives you a policy by policy view, that how many policies are where, in which particular areas, and how based on the line of business, the policy detail, the sum insured, and then the premium deductible limit, etc. Those information. This is like a detailed view. Then there is a view of the policy details. So unfortunately, here all the policies are expired. So as we will go on to the next view, here is the list of the policy block report, where line of business wise policy details are provided. In terms of sum insured, premium deductible limit, we can move forward further, and it gives me the status of the current month, if there are any policies that have been added in this month. So it will show me that also. And it will show you the top 5 policies which have the sum insured greater than 25% from the average sum insured that you have. So is this risk block containing any large policy that could trigger a huge risk, or that could trigger a huge claim, or more than one such top 5 such policies? It will show you. So this is the advantage of this risk block. And as I said, the idea behind the risk block is that you can identify areas where there is a cluster of policies that you are underwriting, and all the entire cluster could be at risk together. So you want to track exactly how much risk are you picking up within that specific cluster, and then accordingly you want to plan. At a certain point, you may say that no, stop. Now we don't want to take more, because as per the risk assessment of this risk block, we should stop at this point of time. So this is the whole idea and premise. Let me quickly show you a user location. Then, if time permits, I'll come back and show you how to create a risk block. So with user location, we have a once again, I have created a location here, which was a sports center. I could find out. So as you can see, it basically is capturing a lot of different attributes. So there are some attributes that you will automatically get because these attributes are already there within the system, and you can add those. If you if you want to add more, you can. So you can by doing that, you can map it. It will automatically map it. Sorry, I'll just quickly zoom in to show you exactly where this particular
Tifosi.
Yeah, it's here. This is how we can do that. Now let me quickly show you how to create this, because I think I have a few minutes. I have 1 minute left. Okay. So let me just this is the tool for add your own location. For example, I click on this tool and say I am interested in the museum. So I click here and I can say this is the museum. I may have typed it wrong. MACN. Okay, right. And then I can give some description. For example, you may say this is a new policy.
Mistyping, sir. Mistyping. Museum, not museum.
Oh yeah, MUSSUM. SEUM.
Mistyping.
Okay. All right. So now here you can see that these attributes the application has automatically picked up. There can be more. These are some of the additional attributes that we have already created. If you want to add more, you can create here. For example, you may say add new field. You may say I want to add say number of valuable masterpieces. You may say that this museum has got 50 very highly valuable masterpieces. You can save. Once you have saved, it will show up here. So number of additional, and once we have done that, we can save it. The location gets saved and it appears here. And now you have that information saved within the database, and year after year, whenever you are underwriting, you can always go back to this. You don't have to. Similarly, for example, there is an industrial location for which you have also done a site survey and you got the survey report. You would like to capture some of the information from the survey report into this database. You can keep on adding those fields over there and boom, it's right there for you again. So next year, you don't have to run through the paper report. You have that information digitally available, spread across to all your underwriters, wherever, in whichever office they are sitting, they can have a look at it. If you have any partners who are underwriting, you can give access to them also. So if you permit me 2 more minutes, I will quickly show the risk blocks also. I hope it's okay if I take 2 more minutes.
Yeah.
Okay. Thank you. So I'll go into here, creating a risk block. So let's say this is the risk block area. So I pick up this, for example, and let's say I say that, let us say that for the sake, I'm saying this is the downtown area. I have a lot of exposure in downtown, right? So I say, okay, from this point, I want to create my downtown. So I'm creating a pretty complex object here. So let's see. So now what is happening is that the request has gone back, an object is being created on this, and then I will get a screen where I will be able to put the name. So I say this is say downtown Jakarta. And please, please bear with me. I don't know where the downtown Jakarta is. I'm just trying to show you the application.
Yeah.
So there is a huge market here, but the risk is also high, right? So we created this risk block. Now the downtown Jakarta has come up. I can create report for downtown Jakarta. Now this is based on the exposure that you have already input into the system. So you did immediately, it tells you how much have you already accumulated here by various lines of business, right? We are seeing that we already have a lot of policies here. Now we know that the risk is also here. The risk is also high. Now you have the opportunity to take the call. Do you want to continue to underwrite further? Do you want to stop at this point? At what point you would like to stop? And accordingly, you can create your strategy and send out the information to your sales team that up to what point you have to stop. And then you can continuously keep on monitoring this risk block on a regular basis as more and more policies come in to finally sound out a warning. Okay, stop now. No more policies in downtown Jakarta. So we can, as I showed you earlier, also we can move. Now here you see the difference. You see the total sum insured is this much, but out of that, nearly 50% is has a deductible of less than 10%. So we are into a high risk area, and 50% of my policies are having a very low deductible. That doesn't really make me comfortable, for example. So this could be the decision view of the risk manager who is looking at this. So once again, the list of all the policies. This is running into multiple pages. And then the line of by accumulation by line of business, which line of business has how much in terms of premium, in terms of deductible, and so on and so forth. And finally, the top 5 policies. So here in this case, we are seeing that in marine we have got 3, and in motor we have got 2, which are basically contributing to the large sum insured. Well, there is more to show. I can spend a lot of time, but these are some of the most important capabilities that I have shown you. You can country-wide policy report. You can also see by admin levels, and you can also see this. This is also an interesting report. This is more targeted towards the reinsurers, who are getting accumulations from multiple insurers, and they want to see how the risk from various insurers is spread. Let me just quickly run it. It will not take a lot of time, just a few seconds. This first gives you a summary that this is the total accumulated administrative unit wise value. These are the total number of administrative units where the sum is insured. This is the total value that has been insured across all the insurers that the reinsurer is handling, right? And these are the accumulations by various risk zones. So how that gives you an idea that you have got a lot in the high zone, in the high risk area from first insurer, whereas the second insurer, the risk in the high in the extreme is much lesser. So you can see that the insurer 2's underwriting practices are better than that of the insurer 1. And but I'm just comparing the top block, not the remaining. When you look at everything, you may come up with a different decision also. But looking at these two, you can take that call, and then accordingly, when you are giving them pricing, you can give a little bit better price to the insurer 2 than insurer 1. So it has a lot of additional pages also that give you insurer by insurer details also. Let me quickly jump onto. This is the first insurer, and then how much is in terms of value accumulated where, and then the risks. And so let me, if there's anything else. So basically this gives you the for various, this is for engineering, the previous one for a different. So for various lines of businesses, you have different screens giving you a view of, you can also see which line of business is driving. You know, that is the beauty of this report. So just by a single report, you can, as a reinsurer, you can compare multiple insurers' data and see who has a better underwriting practice, and then accordingly you can give them the an advantage based on that. So that is all from my side. I won't take more time. I would like to leave time for question answers. Thank you very much.
Okay. Wow. Thank you very much, Pushpendra. I think it's a very thorough explanation of what you can do. So now we come to the discussion. Anyone who wants to know more about the program, we still have like 15 minutes ya, Pak Edwin. Berapa menit untuk diskusi?
15 menit.
15 menit. Oke. Okay.
Ada yang rekan-rekan ingin ini ditanyakan, mungkin bisa di raise hand ya.
Bahasa Indonesia boleh kok.
Pushpendra, I have a question. Perhaps you could explain to the other participants. Is the risk scores that you allocate by peril, which go on a scale of 0 to 10, how is that scale determined?
Okay, so that scale is basically a function of how the hazard impacts the structures. So, for example, if I talk about typhoons, in typhoons we know that if the winds are say less than 60 kilometers per hour, there is going to be no impact. If the winds are going to be between 60 to 80 kilometers per hour, then the impact is going to be slight, and then so on and so forth. So this is based on the historical impacts that we have seen. Does that answer the question?
Yep, thank you, Pushpendra. Yeah.
Okay. So mungkin dari Askrindo ada yang mau ditanyakan? Silakan. Can I ask you one quite sensitive actually, Pushpendra?
Yeah, sure, absolutely.
Okay. So, have you already had one client in Indonesia so far?
No, we don't have any clients in Indonesia.
Okay.
So. Yeah.
Okay. Yeah. But from your presentation, I think it can also be implemented to all kind of catastrophic risks. So because last year actually OJK organized one event for flood risk management.
Okay.
Yes. So, but I'm not sure so far what is the update of this progress. Because I can see that you also have the ability to, to calculate the flood risk exposure. Is it correct?
Yes, yeah, absolutely correct. Yes.
Okay. Yeah, I mean, now I don't know. Once when I was part of the management of Zurich, I tried so hard to find out which part of Jakarta which is exposed to flood, and now I don't know what is the update, because so many things have done actually. I was there in 2010.
Okay.
Okay, so now we have this canal, the channel of we have two, the east part of Jakarta and also west part of Jakarta.
West part, yeah.
Yes, so you are aware of this also, yeah?
Yes, I am. In fact, way
okay,
back, I don't remember the year, but in partnership with NTU, we created a Jakarta flood model.
When was it?
I don't remember the year. It will be maybe like 2011, 12, or something around that time.
Okay, because I think it was finalized. The construction is around 2000, like 12 or 13. That's, and now also my house. I mean, I'm located in East Jakarta.
Okay.
Is now is safe from flood risk. So now our governor also has already built some kind of like what we call is the vertical some kind of well, I don't know in English, but this technology can save more of this flood risk. That's what I feel. Yeah.
Okay.
Are you aware also of this development?
I am not aware of this program in Indonesia. If you could share me a link, that would be great.
Yeah, I think now I'm trying to find out, because my question is will be how good is this?
Yeah, so I understand where you are coming from, but I can once I have a look at it, only then I can say something about it.
Oh yeah. Okay. Okay, I think we can discuss this in the near future event, if because I think we really need this kind of model, and then we will see the feedback of the market of how this program will be beneficial to all of us.
Yeah, absolutely. In fact, especially for Jakarta, I think that we should be looking at. I think there was a time when parametric insurance covers were also being thought about for Jakarta, if I am not wrong. But I don't know exactly how much progress happened in that direction.
Yeah.
Yeah, just to add, just to add on that.
Yes, please.
And Edwin, is that we've had some discussions with some of the reinsurers in Indonesia, with MyPark and Indo Re, on this topic in the last sort of 6 months, and those are ongoing.
Yeah.
But like most things in Indonesia, this is not necessarily sort of a simple solution with regards to flood, because it involves government, different industry interests. So that's why I thought that demonstrating the RMSI platform to a broader audience through Ikonoa to different insurance companies, that they may have their own different ideas and find this tool useful to help their own existing portfolios and also underwriting new business, rather than looking for any industry solution. So that's where we've been up to.
Oke.
Oke, sepertinya ada yang bertanya, Pak Taufik. Silakan, Pak.
Silakan Pak Taufik.
Ya, terima kasih Pak Russel dan Pak Edwin. Good afternoon, Pak Pushpendra, Pak Andrew. Okay, from the dashboard, what is the name? PQRs, yeah. From the dashboard demonstration.
Yes.
So the data can can show in dashboard if we submit our data, right? So first we submit we upload our data to the system, and then we can read and see widget or portfolio or the information on the dashboard like this, Pak Pushpendra.
Okay, so there are two parts to data.
Yeah, okay.
One is the hazard data that you don't have to import, that the solution already has. You only have to import your portfolio data.
Okay.
Basically, your policy data is the only data that you have to import. So for underwriting function, where you want to assess a particular risk before you underwrite it, you don't have to upload anything.
Okay. From this
So
point,
it is only when you want to see the accumulation of your risks in various risk zones, that is when you need to upload your policy data.
Yeah. Okay, clear. And then from this, from my first question, and then next, then all data is actually still in gross exposure. And then if I see your demonstration from first and until the end, I'm still not when we want to know about the net exposure. As you know that if we upload our data or portfolio, the policy of course contains our net and then the reinsurance exposure. How we can separate this profile on your system? So we only know about our net exposure. How the system is work?
The system will only show your exposure to you. So whatever policy data that you upload, it will only categorize your exposure data into various risk zones, not the industry exposure. No. Please don't get confused.
Yes, this is our data, our insurance company data.
Yes.
I just only want to know our net, because in our portfolio there is a insurance part, and then there is our net.
So how
we can separate this profile on your system? We only know about our net. Can your system separate this profile?
Yes, you will. The system already has a separate. It will always keep your profile separate. It is by design.
Oh, okay.
It is by design.
Okay.
The application will always keep your profile separate from the other company.
Yeah, but the point Pushpendra was that Taufik is making is, can they show their gross exposure, and then in another column on the Excel spreadsheet, can they then show net retained? Because they only want to see what their net retained exposure is, not their gross exposure. So can the platform show that?
Understood. So it is up to basically it is up to them. For example, if they only upload the net exposure, they will see the net exposure only.
Okay.
Right? Okay. Now, if they want to see both, they want to see the gross exposure also, and they want to see the net exposure also, then that customization can easily be done. That is not a problem. So it is just a matter of adding another column that basically shows the net exposure in addition to the gross exposure.
Okay, so the solution is we can edit a new column, ya Pak, in your platform. Okay.
Yeah.
Thank you, Pak Andre, to help me to explain to about this about my question. Thank you.
Okay, sir. And sorry, I was not able to understand.
Yeah.
I was not able to understand your question first.
Okay. Thank you.
Yeah, just for your info, Pak Taufik Nurhidayanto is the head of reinsurance of NMC Insurance, Andrew and Pushpendra.
Okay. Nice meeting you.
Yeah. Nice to meet you, Pak.
Okay. Anyone else? If not, then I think bagaimana Pak Edwin? Silakan Pak, mau ditutup atau bagaimana?
Ya baik, Bapak-Bapak, kita kasih 1-2 menit. Barangkali ada yang sudah ini, silakan di raise hand. Oke, kalau tidak ada, kita tutup.
Mungkin ada
kita kali ini.
Foto bersama dulu ya.
Sebelum ini, Mas Abi silakan di foto, Mas.
Perlu buka foto kali ya. Perlu buka cam-nya dulu. Diminta untuk kameranya dinyalakan.
Siap. Dinyalakan semua Bapak-Bapak, kita foto.
Ya.
Nanti ada sertifikat ya Pak Edwin untuk rekan-rekan ini.
Ya, insya Allah nanti disiapkan oleh Ikonoa.
Ya. Tanda tangannya dari
silakan Mas Abi dari Ikonoa nanti manajemen Ikonoa.
3 lembaga ya yang sign ya.
Ya. Silakan Mas.
Oke.
Rekan-rekan kita on-kan kamera. Oke.
Page 1 dulu ya. 1, 2, 3. Lagi 1, 2, 3. Page 2. 1, 2, 3. Sekali lagi 1, 2, 3. Oke, sudah.
Baik.
Okay, thank you all the present, also our trainer for today, Bapak Russel Effandy, Mr. Andrew Harris from the Specialist Singapore, and also Mr.
Yeah, you can start with push. That's okay.
Sorry. India.
Except for India, rest of the world calls me push only.
Pushpendra Johari. Okay. Thank you for the participation today. I hope so we know about the catastrophe the webinar today. Mudah-mudahan bisa untuk kedepannya kita lebih paham tentang catastrophe risk management. Thank you all.
Yeah.
See you.
Thank you.
Thank you.
Next webinar.
Thank you Andrew, thank you Pushpendra.
Thank you all.
Thank you Russel. Bye bye.
Terima kasih.
Thank you. Hopefully you can visit us in Jakarta soon.
Bye bye Andrew.
Thanks Pushpendra.
Oh Mas Kun, semuanya. Assalamualaikum warahmatullahi wabarakatuh.
Terima kasih Pak Russel.
Terima kasih semuanya.
Recording stopped.